Hi everybody, welcome back. Market overview, beginning of the week. Today we're opening up the week Monday. We're going to be having a recap on all of our positions, our active positions that is. We happen to have 2 positions in the cryptocurrency market and 5 active positions in the foreign exchange market. And we're going to start with the cryptocurrency market. Since we only have 2 positions here, I want to talk about the Bitcoin that managed to break below a big support level right here, 26,237. And we were waiting for that breakdown. In fact, we got in before we got that weekly breakdown confirmation, which we did. Check this out. Weekly chart. Gonna zoom in. There you go. Take a look at that pullback. That's last week. That's a strong sign that price action has more of that downside potential in the pipeline. So we actually had a very successful bearish campaign leading to that big support level, to 26,237. Here, a couple of weeks ago, we got out. But we decided to jump back in because price action was able to crack that level and close the weekly bar. That's 2 weeks ago, just a tag below. Last week was was pretty hectic because price action actually started off hammering upwards. But then as price action, as the week progressed and came to an end, we saw that price was beginning to pull back down, leaving that big spike across, and we felt like it was gonna stay below that level by the end of the week, meaning it had a bit of a false breakout, a fake out here on the way up. Yeah, so this is how it looks like from the daily perspective, right? Price action still trading below that level. We feel strongly that it's on its way to 24,720. Let me talk about that particular profit target, 24,720. First of all, it's easy to see that's where the previous low is, right? From June, from 3 months ago, price action was right there. But more than that, just try a simple Fibonacci projection analysis. That's what we applied here. Take the previous opposite move from bottom right here all the way to the top. That's the previous opposite move, right? And apply 123.6%. It falls right here, and that's a formidable Fibonacci projection level that we're going to be working with. That's why we chose that level to be our primary target here. As you can see, price is slightly in profit right now, but nothing to write home about. We're still waiting for that big drop. Same with the Ethereum, a little bit different though. Here we're bearish on the Ethereum, but this is as opposed to the Bitcoin where we have a short-term type of target. Here we're looking at a medium to long-term type of target because we're targeting the medium to long-term cycle. Check this out, monthly chart. The break below 1758 is money. All right, we've had that breakdown finally. If you go back a couple of months ago, price action was testing that level and it held, but not this time. Just a few days ago, we had the breakdown with the monthly close. Take a look at the close, 1648. That's more than 100 points of a breakdown. So I believe this is a legit breakdown, meaning price action has a lot of downside potential here. We think it's going to reach 1151 because that's pretty much where it came from. That's also the next big support level. So we're going to try to build up a big size position as long as pricing is going to be consistent here on the downside. But the target, again, it's pretty ambitious, right? 1151. Those are the 2 positions we have right now in the market. Forex market, we're more busy on that front. We got 5 active positions. We'll start with the gold, which we already took some profit here, guys, because 1951 was our secondary target. So we got there. But that's just the warm-up phase, right? The real move is gonna be from 1951 all the way to 1991. That's the real move we're targeting here. So everything leading to this point was kind of a warm-up stage, but we already took some profit off the table. Once price action kind of tapped right here on that 1951, we decreased the position size and took some profit off the table. Now we're still in position, by the way, but waiting for price action to cross over. Once it crosses over, we'll know that we are on the right track. We're not going to have any technical correction or downside reversal or anything like that. And at that point, we're going to be getting more aggressive, building up a bigger size position, because that's the bulk of the move we're trying to catch, all the way to 1991.48. That's going to be our final destination. Take a look how it looks like from the weekly perspective. We called it out a couple of weeks ago. When we saw price action coming back up on that 1915 level, we felt like this was a false breakdown. Also, keep in mind, price action on the way up last time, it didn't reach 1991. It missed it by a tiny margin. But it missed it and then went down again. But it didn't really break down, right? Take a look at the monthly chart. That's how we were able to call that bluff, because we saw price action spiking 1915 from the monthly perspective. So clearly 1950 is a solid support, right? Every single time price action was testing it, it passed with flying colors. So I think price action is still trading in that range, still trading sideways, by the way, ever since March, right? Ever since March, it's trading sideways. And now it's been giving us that back and forth exchanges. Now it's on the way up back to 1991 at the very minimum. That's why we're having that position still open, right? Gold. That's the first one. Second one, New Zealand Japanese yen. There were a few days of concern, I have to admit, because when price action was encountering 87.22, we knew that's what was going to be an obstacle. And we knew that it could, push price action to the point of downside reversal. Having said all that, we decided to stick and stay in that position, even though we noticed that rejection price action got right before the weekend. Reason B, we're very confident on that upside push all the way to 88.12. Take a look how this is how it looks like from the monthly perspective. I'm going to zoom in. Same level, 86.42 on the bottom. Huge support. And we've seen that support in action last week and last month and the month before. Right? So we think everything is contained inside of that range, that blue system here. Right? So, yeah, I mean, we stayed in position. Pricing was on the back foot for a couple of days, but now it's coming back up and we're back into profit. Very small profit right now. $50,000 position we have. We're not going to increase the position size until we can verify a breakout of 87.22. Hopefully that's coming in the next day or two. Yeah. Let's see what else we have. We have the Aussie Japanese yen. It's like a twin brother position to the New Zealand Japanese yen. Both very highly positively correlated, right? And here also we had a couple of sleepless nights, if you want to call it that way, because price action was climbing. The minute it broke through 93.82, we pulled the trigger, right? We talked about that level being the trigger level. Once that got broken, you can see we pulled the trigger the first time with 50K. The next day, price action kept moving forward. We pulled the trigger the second time with another 25K. The third day, we kept going. 25K. So we got to a $100,000 position as price action was closing the distance to the target, 95.19, but then missed it by 19 pip. You can only imagine how upset that was to see price action going back all the way down. it was very tempting to run away, run for the exit, right? But we kept our position alive. We kept our composure because we knew there's a very good chance price is just going to be testing 93.82 from above. Going to retest, make sure it's a solid support, and that's exactly what happened. Friday, a lot of negative momentum right off the bat. Price action reached just touchdown here, 93.82, and pulled back, bounced back up right away. Right, a testament to that support level coming from 93.82. Now, opening up the market today, we saw the turnaround here off of that 93.82, and we felt a lot more confidence. And guess what? We threw in one more trade. So right now we're 125k position size on the Aussie Japanese yen as it's closing the distance to 95.19. I would assume, I would speculate here that we're gonna hit the target pretty soon. Correction, the technical correction is behind us, right? I'm talking about last Thursday and Friday. So I don't see any more reasons for price action to stall. I think it's going to go right at it and charge at that 95.19, hopefully sooner than later. It's going to be super interesting here for sure. Stop loss level was adjusted too from 93 to 93.40 for all of the trades, of course. Yeah, the next one is going to be the dollar Canadian, guys. Dollar Canadian, super interesting. We were bullish on the dollar Canadian from the moment it broke 34.50. 34.50 was a tough resistance level. We saw it in action back in the beginning of August. But then the crossover, we've had that breakout and we started to pile up those trades, right? Right now it's 75k. But we were a little bit inactive here because price action was kind of having a bit of a technical correction. I guess that would be the way to describe it. But it's coming back up with vengeance. 75k. We're not ready to increase the position size yet because we want price action to conquer new territory here on the way up, right? We want price action to first pass the previous high and kind of get into the range of 36.50 and up. Once it does, rest assured we're going to increase the position size even further. At the end of the day, we're looking at 38 as our primary target and final destination. So there's another 200 and something pip to go. That's dollar Canadian. Last but not least, my favorite position, euro dollar, which we have a position in for quite some time now. Here, guys, we started off when price action was just, well, it was starting to approach 109.11, but we didn't even wait for the breakdown. Officially, that was our trigger level, but we assumed that it was going to be broken, so we got in even before it broke. Take a look, the first one right here, 25k. After the break, we got really aggressive here, right? Every passing day, the price was on the back foot. We fired off more and more and more trades into the mix. And last but not least was Friday. Just last Friday, we threw in one more trade. That was the 5th. So, quick calculation, $125,000 position with $25,000 trades. 5 trades on this one. It looks good. The momentum is off the charts, at least for the last couple of trading days, which was, Friday and Thursday. But take a look at the big picture. That's where it's really interesting. We're looking at a trading range that started to develop, believe it or not, around February. So, 6 months ago, more than that, price action's been trading sideways, even though it doesn't look like it visibly. Looks like it's coming up, but not really. It's been contained beautifully inside of that system here, support and resistance system. Take a look at the top resistance here, 111.55. Looked like it was broken, talking about a few weeks ago, right? That was still in July. Price action was making a noise, making the noise of a breakout, but not really. Ended up just spiking 111.55 here on the monthly chart. When we saw that spike starting to form, we knew there was a downside reversal lurking around the corner. That's what it was. And we called it out right from the get-go. In fact, we had a very good campaign, bearish campaign leading to 109.11. We took profit, we got out, and then we jumped back in. Right? We still have about 150 pip to go. Hopefully, price action will remain steady on that move. As long as it's going to remain steady and stable, we're going to keep firing off more and more trades and get more and more aggressive. As far as stop loss level goes, I know it's time for an update, and it's probably time to adjust the stop loss level, start to tightening it up a little bit. But we decided to wait one more day. We want to have one more negative day before we start to adjust our stop loss level accordingly, but it's coming. It's coming. But as you can see, we're keeping a healthy distance just in case it's going to be super noisy for whatever reason, right? So that's pretty much it. 5 active positions, Forex market, 2 active positions, cryptocurrency market. Hope you enjoyed that session today, guys. We've been breaking down those active positions from A to Z. Our next session, we're going to be talking a little bit more about our pending trading opportunities, or should I say our watch list, which is those trading opportunities that we're looking at closely and we're just waiting for the right moment to strike, which means more like a technical trigger that needs to be broken and going to send us into positions. And we're going to talk about those in the next session. All right, guys, hope you enjoyed it. Have a nice trading day. Till next time, take care.